Welcome to Kartika Classroom. I am Kartika from the Department of Business Administration from Vavu Vajiha Women's College, Kailpatnam. I am going to take a class on joint stock company. I am going to explain from this PPT what is joint stock company and some one definitions, then the features of a joint stock company. Let's go into the class. So first we are going to see what is the meaning of joint stock company. So a joint stock company is a voluntary association of people who contribute their capital in the form of shares in order to earn a profit. So the main aim of joint stock company is more than two members are joining with their voluntarily and they are contributing their shares capital, so they are earning profit from it. So a joint stock company operates in its own name with a common seal. It has a separate body from its members. Next, the definition of joint stock company. So, a voluntary association of persons for profit having the capital divided into some transferable shares. So, they can transfer their shares. There is no problem on transferring their shares. And the ownership of such shares is the condition of membership of the company. The definition was given by Hanning. So next we are going to see the features or characteristics of joint stock company. So first characteristics is a separate legal entity. It has a separate legal existence apart from the persons composing it. So it has a separate legal existence. So it for the name of the company itself, it has a separate legal existence. No, none of the other personal name is not in it. It can own property and sue in a court of law. It has own property and also it can be in his own name. It can be sued in the court of law. So a shareholder being an entity distinct from that of a company can sue the company and be sued by it. So the company will be sued on its own name and also sued by others also. You can make it case. So a partnership, a sole proprietor, has no such legal existence in the eye of the law separately from the persons composing it. So in case of partnership or sole proprietor, it has no such legal existence. So there is no, it is not separate from the persons in that particular. So in the case of joint stock company, we are having the separate legal existence, while in the case of partnership or sole proprietor, it has no such legal existence. Next, we are going to see the second point is perpetuity. So, perpetuity in sense unlimited period. So, if the men may come and men may go, but the company go on forever. So, there is no the ending point for the joint stock company. So, whereas in the case of sole trading concern comes to an end with the death of the sole trader. In case of partnership, if any one of the partner if is death or retired or insolvency of any membership, the partnership will comes to an end. Next one is we are going to see limited liability. Limited liability in the sense the liability of the members is normal limited by guarantee or by the shares he has taken. If a member has already paid the complete amount due on his shares, so he is not further liable towards the debts of the company. So if he has already paid the complete amount due, already has paid a full share, he is not further liable towards the debts of the company. While in the case of sole proprietorship and partnership, the liability is unlimited, and in the case it is also both joint and several. So, in the case of joint stock company, the liability is limited, and in the case of sole proprietorship and partnership, the liability is unlimited. Next, we are going to see the number of members. So in the case of public limited company, the maximum number of members is unlimited and the minimum is 7. In the case of private limited company, the maximum is 50 and the minimum is 2. So in the partnership, the number of members cannot exceed 10, and in the other business line, it cannot exceed 20. So sole proprietorship, we already know there is only one person will be there. Next point is separation of ownership from management. So the ownership of the joint stock company is separate from the management. The shareholders are the real owners of the company, but it is the management is entrusted to a board of directors who are separated from the shareholders. So in a partnership, partners are not only the owners of the business, but they take part in the management. But unlike a joint stock company, there is no separate members for the management and ownership. So both the things are under the control of the partners itself. So the shareholders are not the agents of the company, and the shareholder cannot bind them by his act. So in joint stock company, the shareholders are not the agents of the company, and also they cannot bind them his act. We can't bind them. But in the partnership firm, they are the agent, and also they are other members also the agent of the company. Next one, transferability of shares. So the transferability of shares in the joint stock company is they can transfer their shares without consulting the other shareholders of the company. But in the case of partnership, they cannot transfer their share without the consent of the other partners. Next one is rigidity of objects. Rigidity of objects in the sense a joint stock company cannot do any business not already included in the object class. Since we all know while the joint stock company is started, they will be having the memorandum of association. In the memorandum of association, there is the class object class where the what is the company is going on. So in from that points given in the object class, except that we can't do any other business which are not already included in the object class. So, a change in the object class and a condition laid down in the Companies Act is essential for making any alterations in the scope of the business. So, we need to make any changes in the joint stock company means we need to follow certain procedures, then later only we need to make the alterations, then we can, after including it in the object class, then only we can make it in the business. In case of the partnership, the scope of a business can be changed at any time with the consent of all the partners. So there is no any formalities or tedious procedure in changing the objects. Next, we are going to see the financial resources. On account of liability and diffusion of ownership in joint stock company, there is a great scope for mobilizing a large capital. So since there is n number of members or in the joint stock company, they can expand their financial resources. While in the case of partnership and sole proprietorship, there is a limited number of members, they cannot expand their resources. So they are having only the limited resources. Finally, we are going to see the statutory regulation. So statutory regulations in the sense we are having certain numerous and varied procedures in order to apply with the government. It has to submit a number of returns to the government in case of joint stock company. The accounts must be audited by a chartered accountant, and it is not compulsory in the case of partnership and sole proprietorship. So for the partnership and sole proprietorship, it is not compulsory for them to file returns to the government. So in partnership and sole proprietorship, it is free from the state control and statutory regulations. So these are all the features of joint stock company. Let me have join you with next new topic in the next class. Thank you.